Welcome to the Hidden Figures podcast, Behind the Numbers with the Restaurant Scientist. Within this podcast, we take an in-depth look into the economics of the food service and restaurant industry. The show will examine the economic disparities and inequalities impacting Black food service professionals and restaurateurs. We will support and empower Black food service professionals and restaurateurs by providing opportunities for increased visibility, access to capital, and problem-solving expertise. Welcome to Hidden Figures podcast, Behind the Numbers with the Restaurant Scientist. My name is Jason Wallace, and I am the Restaurant Scientist. So without any further ado, I'd like to welcome my dear friend, true professional and suave, debonair guy, accountant Richard Reed, to the show.
You're too modest. You're too modest.
My man Richard is from the RL Reed Group, and I've been working with Richard for the last year with some of my clients, and I can tell you that he is the best in the business that I've seen in the last 30 to 35 years in the industry when it comes to understanding how to build wealth and maximize profits in the restaurant industry. So, Richard, we always talk on the show about the state of Blacks in the food service industry. Tell us a little bit about your company, the services that you provide, and your expertise.
Okay. Again, Richard Reed. I am the owner of the RL Reed Group that originated in New York City. I've been doing bookkeeping and accounting for restaurants since 1989. And I emphasize bookkeeping and accounting because there are two different aspects of the business. It's a passion. The service that I provide, again, are strictly to restaurants. And I say that because within this business, you have to make sure that you assert yourself in getting the right person to run your business. It's almost like saying, it's almost like having the right doctor. If you go to the hospital for heart problems, you make sure you get the best heart doctor to diagnose your symptoms and give you the best advice so that you can live. That's what I do with the restaurant business. I come in and I can analyze it. I can look at reports and I give you the best advice for starting your business and maintaining your business and making sure as an owner that you understand this business. Because what I've experienced over the last 30 some odd years in this business, that you have a lot of owners, no matter what race, creed, or color you are, who get into this business with limited knowledge. And this is why over 80 to 90% of all restaurants fail. And as Jason could indicate, we've worked closely within the last year, and he sees that. And I've been able to explain that to him. And now I have an opportunity of, within the time frame that we have, kind of give a diverse explanation of why this is probably the case, and how, if you decide to get into the restaurant business, how to avoid these certain criteria.
Absolutely. So let me just set the table here for everyone. Independent restaurants' success rates are far less than multi-unit operators' success rates, financial success rate. So we know that we're talking, when I say independent, my focus is on independent Black-owned restaurants. Those are my clients. That's who I help. Yes. So when we start understanding the economics behind maximizing profit and building wealth, as Richard said, bookkeeping and accounting are critical to those success, and it's actually the least important thing that comes on the restaurateur's mind, right? That is on their plate. They're just not doing it. They're not. Restaurateurs, independent restaurants are so caught up in the day-to-day minutia of running their businesses that they're really not on top of the inventory, the bookkeeping on a weekly and monthly basis. and it's detrimental. So for my listeners out there, that's why having Richard on the show is so critical, and getting this point across, because bookkeeping and accounting are two different functions, and at the end of the day, both Richard and I are here. We work together on a continuous basis to help build wealth. This is not a hobby. This is to build wealth and maximize profit for maximum return on investment. So, Richard, go ahead.
One of the things when I interview clients, I said the most important thing I try to make clients understand: this is not about the amount of money that you bring into your establishment. It is about cost, because you can make $1 million and you can lose $1 million, or you can make $20,000 and you can make $10,000. So it's not about the amount of profit that you're making, and it's what you're doing with the money that you do bring into your establishment. So I just wanted to get that across so that we can understand that. Jason?
Bookkeeping. Let's talk about bookkeeping, because bookkeeping is the first step, because accounting is
the first step.
Right, is afterwards.
I can train you within the course of a week, 2 weeks, to be a bookkeeper, because basically it's just collecting data. And the data that you're collecting is sales, you're collecting transactions that are going into your business. This is understanding your POS system. This is understanding, your payroll data, expenses. It's just a collection of information that allows you to run your business. Again, and it starts from the top, from your sales, having the right POS system, having the right accounting software implemented so that you can record data. This is all bookkeeping. So from a bookkeeping point of view, this is a daily operation. The first thing I do every morning, I wake up, I look at my client's bank account and make sure that everything ties in. This is day to day. This is what bookkeeping is, making sure that I understand the sales, I understand invoices, putting invoices into your system. At the end of the day, the main objective of the proper bookkeeping is that once we produce financial reports, all that information is correct. So again, the main purpose of bookkeeping is collecting data so that when we produce financial statements, the information is correct. And also is making sure that the restaurant, being that the restaurants is different from a lot of other businesses, is making sure that we understand the terminology of chart of accounts. That's probably one of the most important aspects of bookkeeping, is understanding the restaurant's chart of accounts, understanding each account, understanding the fact that it's being classified in the right category, so that when we run reports, we understand what does it mean to have restaurant supplies, what does it mean to have linen, what does it mean to have payroll and taxes, and so that we can break that down when we run our reports. So that's the main aspect of bookkeeping, is to collection of data so that we run reports on a day-by-day basis.
Absolutely. So for you operators out there, you're not creating this data. It's already, you're just collecting.
It's already there.
It's already, collecting. You're just collecting it and giving it over to somebody like myself and or Richard, or and letting us analyze that information and kick it back to you. Richard's always on my back. Where's this receipt? Where's that? Money's going out of account.
So what I'm going to do every morning, I'm going to look at your bank statement, and if I see something that doesn't look right, I'm going to say, hey, I need to know what this is, because I'm not going to wait till the end of the month to find out that, hey, someone grabbed your credit card and made purchases you know nothing about. I'm going to make sure that, okay, I'm going to look at your sales, and the sales said that you did a certain amount of money. I'm going to be waiting a couple of days to make sure that that money had actually hit your bank account. That is bookkeeping, understanding your accounts payables, understanding your vendors, understand that you're paying bills on time, understanding that you're collecting the money that you're supposed to receive from your sales. That's part of bookkeeping. Again, day-to-day operation of all the transactions that has happened in your business on a day-to-day basis.
And the reason why this is so important to do it on a day-to-day basis for those operators that are tied up in the minutia of running their restaurants and is because when there's a problem, you need to know about it as soon as possible.
In the term of fraud, I've experienced where if I'm doing a bank rec on a monthly basis, you may find something that someone could have wrote a check for $5,000, $10,000. It may be too late to try to find out where that money is at. Or who done that. So I always recommend reconciling. It takes me 5 minutes a day to reconcile a bank account.
Right.
As opposed to waiting till the end of the month and you're missing money and it's going to take more time and more effort.
Absolutely. Okay. All right. So let's continue talking about bookkeeping, but now let's segue over into the income statement, and then we'll because the accounting part comes from the income statement, and the balance sheet is more directly tied to the accounting. So now let's talk about. So for the listeners, now we're going to talk to you about the income statement.
So the main purpose of the income statement is to put in information that's going to determine whether or not you are making a profit. It's called a P&L, a profit and loss statement. And the information that you're putting in, you put it in your revenues, which are all your sales, at your net sales. And from that number, you have expenses. What are your expenses? You have what it costs to make that. In the restaurant business, we call it cost of goods, which is your food. And if you're doing liquor, it's your liquor, wine, and beer. And then from there, you have all your other expenses. You got payroll, those are your employees, you have payroll taxes, and you have operating expenses, supplies. You're gonna need utensils. You're gonna need bags. You're gonna need cleaning supplies, linen. All those items are part of your P&L. So these are things that these are costs that you use to utilize the operation of your business to make sales. So again, you have your sales, you have your payroll, and you have your operating expenses. Once all that data is inputted into your P&L, then you look at your bottom line and you have a profit. And this P&L is generated on a given period. So you can have a P&L for a month, which is normal in the restaurant business, or you can do a P&L for a quarter, for a year. So it depends on who you are generating this P&L for. And most owners, we do it monthly, we do quarterly based on we provided information for banks, for creditors, anything of that nature. But for the most part, to summarize, the P&L is a collection of information that the bookkeeper is putting in that would show you at any given period whether or not you're making a profit or not. That's the main purpose of a P&L.
So let me take a deeper dive and talk a little bit about why it's important to do this weekly or daily, weekly, so that you can have this monthly P&L. Because the margin. Go ahead. I'm sorry.
I'm sorry. I'm so used to just jumping. I try to have to tone it down.
We go at it all the time. So because the margins are so thin, people. Like you can't wait until April to find out that March was not profitable. You need to know at the end of March so that you can make those adjustments, because the business goes up and down. And again, we're not talking to you as if you don't know what the expenses that you have. Right? That's not what we're saying. We're saying that by bringing on hired professionals like Richard and myself, it allows you to be a leader and make educated executive decisions based upon facts. Right? Based upon real data about how healthy or unhealthy your restaurant may or may not be, depending on the time of the year. And that changes drastically, and go from a 1% swing to a 5% swing on $1 million operation is a lot of money. There's a lot of money.
And I say that we do this on a daily basis. Give an example is that one of the biggest challenges in the food business is getting your food costs, your costs together. And I've had an incident where I was training someone, and I said to them, make sure that you itemize your invoice, because sometimes they buy not only food from this vendor, but they buy supplies. And what that person was doing, because they didn't take notes and pay attention, they were putting everything to food purchases. So it threw off his food costs. So he was not able to make the proper decisions. This is why we do it daily. When I go into your bank account, I may see a receipt, a purchase from, just say, Fairway.
Restaurant Depot. Because a lot of my clients go to Restaurant Depot. I don't know why.
So we need to break that. We need to say, okay, did you buy, what all did you buy from Restaurant Depot? Did you buy food? Did you buy supplies? Did you buy container size? Because at the end of the month, when we switch over to being accountings now, we want to say, hey, why was there so much spent on restaurant supplies? And we're going to have to analyze that. We're going to say, hey, maybe that was food. Maybe that was, so it is criteria. It is imperative, excuse my language, imperative from my expertise that this should be done day to day, weekly. Sometimes it's simple. I can do it on a weekly basis, but I don't wait no past. I don't wait to the end of the month to make sure that data is inputted correctly.
Absolutely. And if I don't send them over that closing inventory at the end of the first of the month, he's like, Jason, where's it at? Where's it at? Where's it at?
Yeah, because it's important.
You got to do that closing inventory at the end of the month. And again, we're not talking to you restaurateurs as if you don't know, but the important thing is you need to be running and leading. Most restaurants are overmanaged by their owners and underled. We need you to be leaders and not managers. So, clearly our services come with fees, but the money that we save you in terms of overall return on investment and net operating income and cash flow is greater. It's greater. We actually end up putting, and this is not a sales pitch for everybody to hire us. This is a sales pitch for you to go out and understand how to acquire your own bookkeeping and why you need to implement bookkeeping and accounting as soon as possible, like today.
And again, it is making sure that I always tell the joke. I'm going to go to the level. I say, you know why Mike Tyson went to prison? Because he got a tax accountant to handle a rape charge.
Right. Exactly. So what he's saying is that you can't hire just a regular, generic, general accountant to handle restaurant operations.
Because see, I understand trend. Like I'm going to say, like I'll tell a restaurant, we got to prepare for August. He's going to say, why we got to prepare for August? Because that's one of the slowest months. Why is that slow? Because everybody's going on vacation. Everybody's planning for school. So people are not utilizing or going out as much around that time. You know what I'm saying? Yep. So you have to understand, a normal bookkeeper or accounting won't understand that.
Yeah.
Won't, because again, one of the biggest challenges that we have in the restaurant business is the fact that we go on assumptions. We go on the assumption that somebody's going to walk through your doors.
Absolutely. So there are limitations in the income statement. And just so y'all know, the income statement goes from January 1 through December 31st. Right.
Yes.
So, that's at the end, then that year's over. So there's only 52 weeks to maximize your profit. Right. So if you're not breaking even by, halfway through the year, then it's a problem because now you're going into July, August, and you're still trying to break even. Right. Technically, in the restaurant industry, we really only make money off of fixed costs. Right. Because variable costs are always going to be there. In order to sell more chicken, I got to buy more chicken. In order to sell more shrimp, I got to buy more shrimp. But the rent and those other salaries and those fixed costs, those go away at some point. So what that variable rate is and that contribution rate, variable costs over sales gives me the variable rate. 1 minus the variable rate gives me the contribution rate. Fixed costs over the contribution rate gives me my break-even point. So we can determine what that break-even point is by the number of sales that you're doing and the number of weeks that are still remaining in the year. So I think we're like right now, I think we're in week 11, right? Out of 52 weeks out of the year.
We're in March somewhere.
Most restaurateurs don't know what week they're in. 90% of my clients are not doing this.
Right.
And between this and human resources are the two most important components in a restaurant, no matter how small or large you are. And those are the two most disrespected things that restaurateurs are not doing. Is they're not doing daily bookkeeping. They don't have an actual bookkeeper and accountant.
And what's my favorite term? If you're not doing I used to do something 25 years ago. We did it at Form, and we said, if you're not doing inventory, you are a printing press, because all you're doing is writing checks.
Yeah.
Okay. So, and Jason said, I emphasize inventory almost like if I cut myself, I'm going to bleed. So that is the key. And Jason sees that in the numbers, because it allows you to make the right decision, because inventory is the key. That is the key in this business.
Absolutely. Absolutely. So let's segue over to the balance sheet now. So for those of you that now we're talking about, all right, so let's say you are successful, profitable, you're maximizing profit, your investors have gotten their return on investment, you know what I mean? So it's 3 years, 36 months or less, you got your money back, now you're trying to grow. So now you want to open up another location. So this is where the balance sheet becomes in, because now you got assets, liabilities, and owner's equity. So Richard, speak to them a little bit about the balance sheet, and we can compare and contrast the difference between the income statement and the balance sheet, because the balance sheet shows the financial position of your corporation at a particular point in time, whereas the income statement shows profits, income, costs, and expenses over a loss over a period of time.
Right. That number get classified into your balance sheet within your retained earnings. So basically, as you hit it right on the point, the balance sheet is telling you the position of your business at any given time. It's going to tell you when one of the things I used to do in the past is that when I interview clients, I would say, let me see your balance sheet, because it's going to tell me how much money you have in the bank. It's going to tell me who you owe money to and who owe money to you.
Liabilities.
Because because in my mind, I'm saying, well, if you owe all these people money, there's this real strong possibility you may be winding me owing me money. So that's a real strong possibility. You might be owing me, because I know what to look for. Yeah. I know if you owe the bank money, if you owe all these, because see, in the restaurant business, people forget what glitter, all that glitter is not gold. Because you could have borrowed money. I've seen restaurants, high-end restaurants, that they owe so much money to investors, so much money to creditors, so much money to vendors, that they are just opening their gates and closing their gates because they can never get over the hump. Yeah. You understand? Yeah. So the balance sheet is going to show you that. That's what it says, a balance sheet. It's going to show you that. And again, it is important. Most restaurant owners, again, if you don't have that right book accounting to look, because a bookkeeper can't look at a balance sheet and tell you. Accounting comes in and looks at that balance sheet and say, okay, we got to make some adjustment. Accounting comes in and looks at that income statement, that P&L, and says, we got to make these adjustments that you're going to have to make, because you're not going nowhere with this. You're just, all you're doing is entertaining your customers. You're not entertaining yourself as an owner, because the main purpose of an owner is at some point is to show some form of profit for yourself.
Right.
And the balance sheet, when I look at the balance sheet and I see that hey, you got accounts receivables. In the restaurant business, you shouldn't have a lot of accounts receivables, because if you're monitoring your receivables and all your receivables is pretty much cash and your credit cards,
yep.
And your credit cards is coming in every other day,
right. So
you shouldn't have a lot of receivables. Only receivable that you do have is probably house. If you have house accounts, which you should be much, but the biggest part of that balance sheet is seeing who do you owe, who do you investors that you borrow, how much money you bought from investors, and what agreements that you have with these investors and banks, So it's very important and again, most business owners, they cannot look at a P&L, they cannot look at a balance sheet, and that's one thing that I try to make my business partners make sure that my clients understand, have some idea what that number means.
Absolutely. Teaching. You teach. You're a teacher. You're an educator.
Yeah, I said, listen, I said, I don't want to sit down and hand you a piece of paper and you go yes and no. Okay, I want you to understand what that yes and no means.
Right.
And ask, Michael Jordan said, a question not asked is the question not answered, you know? So these are the things I try to teach my client.
Yep, absolutely. So we already went through the income statement and the balance sheet, and then lastly is the statement of cash flow. But it's really not that, we don't really deal with that much in the restaurant industry, except in those periods where you have negative cash flow. You know you're going to have a negative month, and do you have that liquid cash in the bank to cover that rent or that payroll or those food costs when you know you have a slow month. So during those other months when you know cash is excessive and the money's in the bank, you're going to need those for those months when there's a negative
cash flow in the restaurant business is just basically because you're mainly dealing with vendors and understanding the terms of the vendors, because you have a vendor that's 7 days, you got to have a vendor that are 30 days. And you got certain vendors that you have to pay. Like I say, you got fixed. No matter what you do, you got to pay your rent. No matter what you do, you got to pay your Con Edison. No matter what you do, you got to pay your insurance. These are things that has to happen no matter what your employee. So you have to understand your cash flow, and based on what kind of accounting method that you're using. And when I say counting method, there's something called an accrual basis of counting and something called a cash basis of counting. And 99% of all restaurants use the accrual basis of counting. And when using that, the cash flow really doesn't kind of articulate what your cash is, because there's a different set of numbers that you're using. And a prime example of that is saying that, say for instance, you have insurance. Your insurance can be $50,000 a year. Now you may have to pay that up front. So that's already coming out of your cash flow, but from your but that's for the whole year. So from your P&L point of view, you're not putting on your P&L for the month of January that you paid this $50,000, $50,000 insurance. You're breaking it up into months. So that's why cash flow in the restaurant business is all based on what form of method that you're using.
Absolutely.
And that's important also to understand.
Absolutely, absolutely. And Warren Buffett says cash is king in the real world. So let me just give you a little understanding of accrual-based accounting. Basically, you have two options. You could record transactions when they occur, or you can record transactions when the cash is when they actually paid. So that's why we mostly use accrual-based accounting in the restaurant industry, is because I want to match week 11 sales with week 11 expenses. I don't want to match it with week 12 or 14's expenses or sales. So that's why that's accrual-based accounting.
Right, and you're basing, when you use a cash accounting, you're basing it on when money actually hits your account. Which does not is detrimental to you understanding what your sales are.
Exactly.
Because I can do, say for instance, you have a house account with someone, and that account, and he charged $50,000. He may not pay you from 6 months from now.
Right. Exactly.
So that has nothing. So your sales just got,
it's distorted.
Yeah,
it's distorted. Doesn't
and that's one of the, and that's one of the. Well, again, it could have been a limitation if you're using the cash-based accounting, but again, most restaurants, all restaurants I've dealt with in my years have always used, and it's a standard use of accrual base of accounting.
Yep. Absolutely. Well, Richard, let's just go. We got about 5 more minutes here. Just share a few of your wisdom. Yeah, I tell you, it goes by quickly, right? Your nuggets of wisdom here in terms of what you would recommend restaurants do, some of the pitfalls and the common mistakes that they make.
The biggest common mistake restaurant business owners fail to do is, number one, invest their time in getting the right personnel. Someone like Jason, someone like me who understand the restaurant business. So if you're hiring someone, make sure they have experience. And even when they come with experience, do a background. I mean, I can say I had restaurant experience and have no clue. It's just to get myself in the door. And make sure, because you're going to know. The first thing I say, The most important part of this business is not its cost. If your bookkeeper cannot explain to you what the terminology cost is, he has no definitive understanding what a restaurant business. He's just a bookkeeper. You need a restaurant bookkeeper / restaurant accountant. And it's important to make sure that you understand. Those are I've seen restaurants close because they don't do inventory.
Got you. Anything we're leaving out here you want to touch on?
For myself?
Yeah.
Oh, again, I've been doing this since 1989. This is the passion. If you need my services, can I give my email?
Yeah, give email, give website, give telephone number, anything you want to give.
My email is very simple. It's richard@thereedgroup.nyc, read with 2 E's, richard@thereedgroup. I can be reached at 718-924-8667, 718-924-8667. Again, this is a passion. Anything that I can do to help upcoming businesses start a business, stay in business, understand the concept, it's only brighten my knowledge. And again, it's just a passion, as Jason has seen me work.
Yeah.
And I'm glad to offer any expertise I can at this time.
Absolutely, and I can vouch for it. The passion part is important because we're passionate about restaurant and food service. We're passionate about Black and brown people and making sure that they have access to people like us, the resources that are required to grow and build wealth in the restaurant space. So it's and he's the best that I've seen at it, and I've worked with a lot of accountants. And I worked in a lot of restaurants, or with a lot of restaurant clients that don't understand the importance of this, and they don't want to. And quite frankly, sometimes, if you're a chef or if you're a GM, minded operator, then you should do that in terms of what you do best in helping your business grow, and leave these other components to other professionals like us, so that you can, to truly build wealth in this industry is through multiple units. I know that's not everyone's goal. Some people just want one restaurant, and that's what they want, and that's fine. And that but it still should be maximizing the profit. If your profits are below 10% net operating income, you're underperforming.
Yeah.
You're underperforming. Your profit should be north of 10%, 11, 12, 13, 14%. And when it comes time to go to the bank or to expand or to try to attract additional investors, that's where someone like Richard's going to come in and really help you position yourself on that balance sheet, assets, liabilities, owners, equity, because that's what the bank or the investors are going to look for in terms of how solvent is your company, because your restaurant is a different thing than the actual company itself. So if you got multiple units, and you've probably seen it out there over the years, so something as simple as a Boston Market. Remember Boston Market? But remember the corporation went bankrupt, but still independent stores were profitable. That's why you still see some Boston Markets out there. What we try to do is educate on the difference between understanding your restaurant operations and how solvent and healthy it is versus your corporation. And Richard helps me help my clients, and he helps his clients understand that if next year we want to open up the next store, we need to start planning that now, because that balance sheet is like an ocean liner. It moves slowly. You know what I mean? You know what I mean? Like, you can't turn that thing like a little speedboat. So in order to make that balance sheet look favorable for the bank in the first quarter of 2023, then we need to make those changes in the second quarter of 2022. And we need to do them legally, and we need to file properly, and that's why Richard is so good at what he does.
And you need to make no change. I tell owners, you need to make those changes without any emotions to your employees, because this is your business. Because if you don't make those, if your payroll is too high, you got to make changes. Because I tell the joke, I say, the amount of money that you probably invested in this place, when you close down, your chef will go across the street and get another job. You know, so if you don't make changes when it comes to inventory, your costs, you know, 9/11 happened, and Steve Hansen was one of the most successful, probably still restaurateurs in the country, and he fired everybody. And then he rehired new people because he knew he couldn't afford a $125,000 a year chef. He fired everybody and he hired new people. Now he hired a chef that makes $75,000.
Right.
Those are the decisions that you have to make in this business.
And you need data to do that. You need the data to make those leadership, CEO, COO decisions. Wow. Well, Richard, I want to thank you for coming on, man. Let me give a round of applause for Richard Reed, the RL Group.
Anytime.
And one last time, how do people get in touch with you, Richard?
They can reach me at my email, richard@thereedgroup.nyc. My number is 718-924-8667.
Sounds good. Sounds good. Well, again, we want to thank all you guys for listening, and all the subscribers for subscribing. We really appreciate you. None of this would be possible without our sponsor, Eat Okra. Let's give a round of applause for Eat Okra. Eat Okra is more than just an app. It's more than just a directory. It's an app that provides a listing in over 12,000 restaurants, Black-owned restaurants across the country. And we encourage you all to download the app. You can also check them out on Instagram, Facebook, at Eat Okra, the app. So I want to thank everybody again. And without any further ado, until we meet again, power to the people.
You are watching a master.